Hello traders and welcome to the show at Quality FX Trading. In today's session we are going to have a look into gold price action in the last week of June 2023. So as you can see here, we are looking into 1 hour chart in the gold, and we have 5 days of trading in the last week of June from Monday to Friday, and we are going to show you how the storyline is working in the price action and how time is playing important role in the price action. So each of these vertical blue lines are indicating basically as a daily divider. So, and always pay attention that we are putting this divider at New York midnight opening candle. So this is the H1 chart, again I emphasize, and as you can see, the first vertical line from left side is starting at New York midnight. Forget about the time you see on the screen because we are considering only New York time zone, but what you can see on the chart is not the New York time zone. That's why it's converted to the identical time at midnight New York time. And you have to do the same way when you are doing the daily analysis and when you want to set the daily divider. So the first one is showing the Monday midnight New York, and then Tuesday, Wednesday, Thursday, and so on until Friday, which was the last trading session of the month and the quarter. Okay, so now as you can see, the first day, in this way you can clearly see what is happening each day. Okay, and basically when you set your chart like this, it's gonna be very clear to understand where the liquidity is resting, okay, either buy side or sell side. And also you can see if you are having a bearish weekly bias, how the price action is going to manipulate the market in order to get the actual distribution phase. Okay, so Monday you can see on the 1 hour chart is very clear that market firstly is manipulating to the upside, okay, because we are having the weekly bearish bias, and as I have discussed in the last quick video of the big picture of gold, our bias is going to be bearish even in July, okay, and we want to get the price to that daily imbalance. So the bearish bias is still valid and is going to continue. So in the last week of June, the bias was bearish, so the price action pushed to the upside, and then on Monday basically it got somehow a kind of consolidating market. So just push the upside, downside, and then stay till the next New York midnight, which was the Tuesday. And you can see on Tuesday what happened exactly. Here, Tuesday, price pushed to the upside, it took the buy side liquidity. Okay, so this horizontal line, the blue one, is showing you the buy side liquidity, which is resting above that actually Monday's Asian session high. Okay, So here, if you pay attention here, this is uh, exactly 8 a.m. New York time, and you see what is happening at 8 a.m. Market is manipulating to the upside, okay, to take that buy side liquidity or that high, okay, because it wants to grab those stop losses and buy orders together, okay. And once it's taking that, it's getting liquidity for the power to push the price to the downside on Tuesday, okay. So here you can see the market is pushing to the downside. Exactly here. Okay? After that, so I just want to show you that how the price is pushing to the downside, so to be clear that where exactly I'm talking about. This is the push to the downside, okay. So we are here now, okay. So after taking that buy side liquidity, market is pushing to the downside, okay. And then market is consolidating for the rest of Tuesday. So this is the storyline of the whole week. I'm describing to you what is happening, and this is going to help you when you are analyzing your daily chart and even 1 hour chart to understand why market pushed to the upside to take that liquidity and then push to the downside as distribution for that day, because the daily bias was bearish. So that's why in the New York 8 a.m. market did the manipulation as usual, because when the bias is bearish you have to wait for the manipulation to take the stop losses of the retail traders, and then market is going to push down as distribution for that day. Hope this is clear now. Then after that, let me go to Wednesday, which is the next day. Again, we have the divider at New York midnight open, okay? And then you have some buy side liquidity here, which is not taking that, okay. And I'll tell you why is happening so, because market wants to keep going to the downside, okay. And here we have something called this is also very important element for our strategy, which you're going to learn soon after mastering all the elements required to learn before getting the whole picture of the strategy. So when I'm saying, because you know what is FVG, okay? FVG is a fair value gap, and it can be bearish FVG or bullish FVG. As you can see here, this yellow box, okay, sorry, the pink box which you have here, okay? This pink box is a bearish FVG. That is clear for all of you who know about the FVG. You can see why this is the FVG. And after getting this FVG, we are getting another FVG, which is basically here. Okay, so I'm moving this to the same Wednesday. You can see price is getting this. Basically, this is the, here is the 8 a.m. okay, New York time. All the time we are talking is about New York time. Again, I'm emphasizing on that. forget about all the time zone in the world. We are trading, successful traders only trading based on New York time zone. This is very, very important. So here 8 a.m. to 9 a.m. market again is pushing to the upside and then creating this bearish fair value gap. Okay, and now I want to talk about this concept which is important for our strategy and how we are calling a FVG as successful FVG. Okay, successful or confirm or retested FVG, whatever you want to call it, but we are calling it in our strategy as last successful bearish FVG, because market after that is pushing to the upside, but you can see it's giving the wick. So let me just put this exactly there for you to understand which candle I'm talking about. This is the one. Okay, so this candle is giving the wick as indicated by arrow. It's giving the wick, but it never closed above that FVG. Okay, so that bearish FVG will remain as valid. And why we are calling it as last successful? Because after retesting without closing above that FVG, market is pushing to the downside and is breaking and closing below this low. Okay, and see where it is closing here. Correct? So because market is going to the downside and closing, so that is going to be our last successful bearish FVG. Now I'm gonna tell you what is the importance of this level. In our strategy, we always keep the last successful bearish or bullish FVG depends on the institutional order flow that you have. Here, the institutional order flow is bearish. Okay, and again, how we can determine or identify that order flow is based on this concept. Okay, that you should have the last successful FVG valid. Okay, and that's why you see the next day how beautiful this level is acting as resistance. Okay, so when the price is pushing to the upside, there was a news here, GDP news for US. Market is going there, but it never closed above that successful FVG. So this is indicating that that successful FVG is still valid as successful. Okay, and then market is pushing to the downside and is going to take that sell side liquidity which was created in the London session. Okay, so exactly here I'm talking about this sell side liquidity which is resting here. Okay, market is pushing to the downside and then market is going back to the upside once the next news of US released. Okay, so this is all algorithmic based on all these concepts that I'm explaining to you to make it crystal clear for you to have a better understanding before we start discussing about our strategy. You can see here the sell side liquidity was taken completely, even it was closed below, but then again it went pushed to the upside, and here it went back to where? To that successful bearish FVG. And you can see again it didn't close in terms of candles body. Don't forget, we are not counting the wick. We always rely on candles body, either considering the fair value gap or when we want to evaluate the swing high or swing low validity. Always rely on candle's body, not the wick. This is very important. So, as long as we are keeping that successful bearish FVG valid, on Thursday price is just hovering around as consolidation till end of that day. And then we have the Friday. Friday usually when you have 3 days bearish move, usually, not always, but usually in this kind of scenario when you have the bearish order flow, Friday is going to be a reversal day to take the buy side liquidity. Okay, so but from Friday, what is happening exactly? Friday, you can see this is the sell side liquidity. Okay, I'm indicating it by blue line. Okay, so this is the sell side liquidity, and this is our buy side liquidity above this blue line, which was taken on Friday. So on Friday, London session, price is pushing to the downside here, it's taking the sell side liquidity, okay, and then reversing and going to the upside, as we are expecting on Friday price action to push to the upside to take the opposite liquidity, which is in this case buy side liquidity, which was created on Thursday. This is the first buy side liquidity on Thursday, okay, here. Then the Wednesday buy side liquidity, and the last time of Tuesday, almost the evening session of Tuesday, and this is our ultimate buy side liquidity for Friday, which was completely taken. So the bias for Friday was the opposite bias to the order flow, and interestingly, you can see the last successful bearish FVG now is invalidated. Correct? It's invalidated, and I'm sure, I trust you understand why. Because this candle, exactly this candle, actually this candle, yeah, this candle, body of the candle was closed above that bearish FVG. So what is this telling? This is telling us we reach to the end of that order flow in the H1 time frame. Okay, so H1 time frame now is giving us opposite direction. Okay, until we get another confirmation based on the higher time frame to sell again. But H1 is now we got the reversal. We got the successful reversal for H1 because of basically two reasons. Okay, one of the reason is that here, if you see exactly here, okay, we had a valid swing high in the H1. Valid swing high, I'm sure you know that we have to have 3 candles, the middle one having the higher high and the third one closing below the 2 other candles in terms of candles body. And after this push to the upside, this swing high was broken, and that successful bearish FVG as well, it's broken. So when we have these two confirmation, then we know that H1 bearish move is now done, and now we are looking to the buy side. Okay, and as I told you, the price actions fractal. It means when we are reversing in H1, that doesn't mean that we are not bearish anymore, because on the daily chart we are still bearish. So now we will focus on the H1 reversal to see how far this pullback is going to continue before we find another reversal for the price action to the push to the downside. Okay, based on the overall order flow we can see in a weekly and daily chart. So that's why we call it fractal. It means price is moving in each time frame to do something to help to the other time frame. Okay, so it means you have the 1 hour reversal. It means it wants to go from discount to the premium on the daily. Okay, and then when it reaches to the premium side of the daily, it's going to the push to the downside to go back to the discounts. Remember, price is always moving between premium and discount. Okay, and I'm going to discuss this in the next lecture. I hope you enjoy this video and you learn something which is going to be beneficial for you. Talk to you soon. Take care. Bye bye.